Hi there, and welcome to our Asset Management Advisor Survey Analysis webcast. My name is Tara Connors. I am the Research Manager for our Asset Management and Digital Advice teams here at Corporate Insight, and I'm going to take you through some of the findings that we had from a survey we took in December of 2021 and the report that we published on it later in April 2022. So here's just a brief table of contents of what we're going to go over today. I'm going to read through the executive summary. We're going to go and find out about the survey sample, any demographics. I'm going to run through our notable findings, also our importance, usage, and satisfaction ratings. There's also a special section on wholesaler survey, and finally some contact us information at the end. Our April 2022 report analyzes data from our survey of financial advisors, which we conducted back in December 2021. This survey sought to understand advisors' preferences, habits, and levels of satisfaction with the asset management digital experience. We specifically surveyed respondents who were both registered financial advisors and at least 21 years of age. The survey questions cover a variety of digital experience topics, from accessing account information to website design, navigation, and ease of use to investment research capabilities. We also asked questions that assess important broad industry trends like cryptocurrency and other trending investments, the use of mobile apps and browsers, and the rise of robo-advisors. Additionally, while conducting this report amid the global pandemic, we fielded additional questions to see the impact on the advisor-wholesaler relationship, the results of which are included in a special section. As we perform an advisor survey every few years, we do include data, and you will hear me reference data from our 2018 survey findings throughout this report. In doing so, we're identifying some of the key trends that have emerged over the last 3 years. One would be advisors increasingly valuing and relying on tools to help them manage investments while they concentrate on clients' financial lives more holistically. Another would be how advisors want more business building and practice management resources, and they want content to be shorter and easier to digest. We did still find some similarities between the 2018 and 21 surveys. We identify several key trends that have remained consistent that include the majority of advisors using asset management websites at least once a week, and fund profile pages remaining the most important feature on asset management websites. All right, so now that we understand sort of what we're going to be analyzing today, let's get into understanding our survey sample. We did have some changes in demographics from our 2018 to 2021 survey sample. Of the 380 respondents we surveyed in 2021, 67% identified as male and 33% identified as female. That's a slight increase from 2018 when we saw 24% identify as female. Further, advisors skewed younger in our 2021 survey. Millennials made up 53% of our sample. That's up from 36% in 2018. Gen X also made gains with 41% of respondents in 2021 versus 26% in 2018. Boomers notably only made up 4% of our sample in 2021 compared to 39% in 2018. This is maybe just an effect of the type of sampling that we did, but also much of this generation has begun to retire at this point, so potentially there are some demographic changes happening. It's important to understand these demographics, as factors like age and gender might influence an advisor's business practices, site usage, and preferences. For example, 80% of Gen Z and millennial advisors and 76% of Gen X respondents identified calculators or planning tools as either very important or extremely important in our survey. Similarly, 76% of Gen Z and millennial advisors and 73% of Gen X respondents believe that practice management resources provided by asset managers are either very important or extremely important. 72% of Gen Z or millennial advisors and 67% of Gen X respondents Also assign these same top 2 box important ratings to being able to log into a site via a social media account, emphasizing these groups' expectations for more modern site experiences. So these are just a few examples of how today's financial advisors may use sites differently than previous generations. As this continues, firms will need to adjust their sites to meet the needs, expectations, and preferences of their current users. Now, moving on to professional registrations. Similar to age and gender, professional registrations and certifications can impact site preferences. Our respondent pool holds a mix of registrations and certifications and works for a variety of firm types. A relatively even mix of responded identified as either RIA or IAR, that was 38% in total, and registered representatives took up 36% of our respondent pool. Meanwhile, 27% of respondents were dually registered. The number of RIAs and IARs and those dually registered significantly increased compared to our 2018 survey respondent pool, where only 24% of respondents identified as RIA IARs, and only 13% were dually registered. RIAs signaled that they use sites the most, with 55% of RIA respondents saying they use asset management websites every day, compared to 44% of registered representatives and 38% of those who are dually registered. Similarly, a larger percentage of RIAs, 59%, said they used portfolio construction and analysis tools than registered representatives, who were 41% reporting use of those tools, and those who are dually registered, 49% of them are using those tools. This is perhaps because RIAs act as fiduciaries and are more likely to offer broader investing services. So while our survey pool represented a variety of firm types, RIA was the most popular, followed by independent broker-dealers at 20% and bank broker-dealers at 17%. Respondents who worked at discount brokerages and independent broker-dealers signaled that they used sites the most, with 57% and 55% of respondents respectively saying they were using the asset management sites every day. Respondents who work at discount brokerages and RIAs were also more likely to use portfolio construction and analysis tools than those who work at other firm types. Respondents also held a variety of certifications, with 38% CFP was the most popular, followed by CFA at 30% and CHFC at 29%. The most likely certifications to access sites every day were CRFAs at 57% and CFPs at 56%, and the most likely to use portfolio construction and analysis tools were RHCs at 71% and RICPs also at 71%. This might be due to their focus on retirement and risk management. Now looking towards, the number of advisors working at each firm and how many clients each advisor is responsible for, we found that in our survey sample, on average, respondents work with large teams of around 20 advisors and pools of around 159 clients. These numbers slightly grew from our 2018 sample, where we had averages of 12-person teams and pools of 139 clients. So with an increased client base and overall business growth, AUM has consequently seen a significant jump. In our 2018 survey, AUM was concentrated under 300 million. Very few advisors reported higher AUM ranges, with most values falling between 25 to 50 million at 19%. However, the total AUM reported in our new 2021 survey, respondents really concentrated in the 150 to 500 million range, with higher value ranges such as 400 to 500 million at 16%, more than tripling since our last survey. Tenure decreased from the 2018 average of 12 years, which could indicate that less experienced but younger and more tech-savvy advisors are leveraging these asset management sites. With more assets and a bigger client base, advisors are increasingly relying on technology such as tools to help them manage portfolios. When asked how important these websites' features are, 79% of advisors assigned portfolio construction and analysis tools top 2 box importance, up from 71% in 2018. Now that we've gone over the demographics of our 2018 versus 2021 samples, I'm going to get into some of the notable findings that we came across this year. So we found that after mainstream business press, fund company websites and wholesalers served as advisors' primary sources of firm and product information. So while advisors primarily learn about fund companies and their products through major publications like the Wall Street Journal, firm websites and apps serve as the second most important channel of gathering these details. As such, a straightforward site experience is critical to providing exposure for firms' proprietary products and services. Firms should especially take care to highlight funds from high-traffic locations such as the homepage, since fund profiles remain the most important website feature according to advisors. They assigned it 83% top 2 box importance during our 2021 survey. Other valuable features such as portfolio analysis tools and fund screeners should also be promoted in highly visible locations to establish firm value beyond product offerings. Discussions with funds wholesalers serve as the third most common way for advisors to learn about asset management firms. When asked how important it is to meet with a wholesaler before deciding to work with a fund company, 71% of respondents identified these meetings as either very important or extremely important. Advisors meet with wholesalers for a variety of reasons, but learning about the asset manager's services, for example, continuing education courses or webinars, is the primary topic of discussion. Since many of these resources require advisors to register with the firm, wholesalers are an important way for advisors to further establish the benefits of such a partnership. Firms should accordingly provide wholesaler contact information from an intuitive location and encourage these conversations and potentially generate new business. Survey results indicate that Fidelity is the most used asset management website by our sample, with other major industry players, including the two biggest asset managers, BlackRock and Vanguard, comprising the remainder of the top 5 list. This could be attributed to name recognition, since advisors primarily learn about fund companies via the mainstream press, which covers larger firms more often due to their consistent product launches and the influence of their business decisions on the industry at large. We also found that mobile use has continued to increase. So since our 2018 survey, mobile uses increased significantly. In 2018, 70% of respondents said that they had accessed asset management firm resources through a mobile platform in the last 12 months. This number jumped to 96% of our 2021 survey respondents. From 2018 to 2021, we saw a large jump in the mobile browser and tablet app use specifically, with increases from 36 to 76% for mobile browsers and 29% to 40% for tablet apps. Specifically, the large jump of mobile browser usage aligns with global trends in mobile internet usage. They grew overall 31.36% in the first quarter of 2015 to 50% in the last quarter of 2020. Further, it is likely that the pandemic accelerated mobile use even more as advisors moved to remote work and perhaps did not have access to some of the tech that they had in the office. While our 2018 survey found that mobile usage increases as age decreases, that no longer appears to be the case. Overall mobile usage was high across generations, with 98% of Gen Z and Millennials, 96% of Gen X, and 77% of Boomers signaling that they have accessed an asset management firm through a mobile app or browser. The only notable difference with age and mobile usage came with apps, where 85% of Gen Z Millennials and 83% of Gen X said they use asset managers' mobile apps, whereas only 27% of Boomers access from those platforms. While this is likely a case of due to younger generations using other types of mobile apps, such as social media platforms, more frequently, The number of boomer respondents is quite small within our 2021 sample, and thus these results are not statistically significant. It is important to understand how advisors access asset management websites, as desktop and mobile experiences require different UX design elements. For example, mobile screens are much smaller and as such require different navigational elements. Firms should keep these trends in mind and adapt their platforms so that they showcase tools, resources, and other capabilities in a mobile-optimized format. Next, I'm going to talk about the types of thought leadership our advisors expressed interest in. We found that advisors prefer some easy-to-read infographics to learn about market and investing news in general. So, thought leadership and expert advice serve as a way for asset managers to differentiate their brands, reinforce their expertise, and build trusted relationships with their clients. As such, 70% of advisors said that commentary and thought leadership were either very important or extremely important to their site experiences. In terms of content, advisors valued infographics the most highly, with 79% top 2 box importance. Infographics offer a quick way for advisors to receive and digest the most important market news or data, another significant area of interest for respondents, with 76% of advisors assigning that topic markets and investing research, with top 2 box importance. Advisors' preference for infographic content reflects the growing trend of mobile platform usage, as well as the simple format offers an easier reading experience on a phone screen than the long scroll format of traditional articles. We also asked a bit about some of the more trendy investment products. So, over the past several years, funds incorporating cryptocurrency, alternatives, ESG strategies, futures, non-transparent structures, and options have risen in popularity. However, just because an investment is on trend does not mean that advisors would necessarily recommend or use the product with their clients. We asked advisors about these trending investments to see which types of investment products they actually include in client portfolios. So, unsurprisingly, cryptocurrency funds were the most popular trending investment vehicle, with 58% of respondents saying that they use this type of product with their clients. While 17% of advisors said that 50 to 70% of clients have expressed interest in crypto investing in the past 12 months, much of the popularity is likely due to crypto funds' newfound availability at asset managers. 2021 saw big strides in crypto products when the SEC approved the first ever Bitcoin futures ETF, the ProShares Bitcoin Strategy ETF, in October 2021. Though the fund ultimately saw dismal results during its rollout, it paved the way for several other funds focused on Bitcoin and crypto to come to market. In 2022 alone, several large asset managers, including Fidelity, Schwab, and iShares, filed to launch or launched ETFs focused on crypto. Tied as the second most popular trending investment were alternatives at 49% and ESG funds also at 49%. While ESG investing has been popular for some time, it is notable that advisors still incorporate ESG funds into portfolios, especially amid higher premiums and concerns about greenwashing. On the other side, alternative investments, the interest there is no surprise, with these products seeing a record $25.7 billion in net inflows during the first 11 months of 2021. Further, we asked advisors about alternative investments in 2021 prior to the volatility and increased inflation that are currently happening in the markets. If they were asked again today, it is likely that even more respondents would signal that they would use alternative investments, since these funds are common in inflation hedges. So we also asked advisors about what they saw as the biggest threats to their business. And obviously, one of the ones we asked specifically about were the rise of robo-advisors. The robo-advisory space is expected to see an impressive compounded annual growth rate of nearly 40% between 2021 and 2028. Robo-advisors appeal to investors with low-cost access to digitally managed portfolios and, for some account types, human advisors. Due to the low barrier to entry, robo-advisors attract newer investors with less wealth, potentially creating a smaller prospect pool for advisors. As such, many older advisors are concerned about the risk of these alternative products. However, younger advisors, the millennials and Gen Z respondents, see this as the least concerning challenge they are presented. Instead, respondents falling into the millennial and Gen Z age group are concerned with attracting other young people to a career in wealth management, as 40% of financial advisors are expected to retire within the next decade. Thus, the younger advisors who remain will need to replace a large portion of their employees to carry on their business. Regardless of their concern, advisors across all age groups plan on increasing their use of technology and offering more specialized services to help attract and retain clients. This could explain the high importance respondents assigned to practice management resources, which was at 76% top 2 box, and those resources really just help advisors develop business strategies and client engagement techniques that would be very helpful for prospecting and retention. Okay, so after that sort of mishmash of different notable findings that we had, I'm going to go through the importance, usage, and satisfaction data that we collected. We found that unequivocally advisors are using asset management websites. So desktop web platforms still constitute the main interface by which clients will interact with asset management websites. About half of advisors access at least one asset management site every day, with little change in that number since 2018. Diving deeper into the 2021 data, millennials were the most likely generation to log on daily at 49%. And the most likely registration type to log on daily was RIAs at 52%. Finally, the most likely type of firm to be accessing an asset management website from was a wirehouse at 45%. The largest difference between the 2018 and 2021 data for advisors that logged in a few times a week, that's really where we saw the most change. There was a 7 percentage point increase over the last 3 years. As a result, the amount of 2021 advisors that use asset management websites at least once a week is up to 94%. That's across all of our demographics. Only one 2021 respondent reported using asset management websites once every 2 to 3 months, and none reported usage less than that. This demonstrates how important asset management websites are to advisors, as none can perform their job fully without consulting these sites semi-regularly. Knowing how often advisors use these resources can help firms identify when to update content most effectively, helping ensure that they receive new value each time advisors log on. Additionally, creating a smooth and memorable website experience remains vital. While almost all advisors are using asset management websites at least weekly, their use remains concentrated to a few select firms. A comprehensive experience with better resources and UX is what will keep driving advisors to a particular website. We also asked advisors about which features on the sites they actually use. So in the past 2 advisor surveys in 2016 and 2018, advisors decisively identified fund profile pages as the most used feature on an asset management website. However, in 2021, advisors changed their usage patterns, putting both portfolio construction and analysis tools and practice management resources above of fund profile pages this time around. These changes represent a shift in how advisors approach their practice. With the rise of robos and fee-free, self-directed trading, advisors are focusing less on fund picking and more on their clients' holistic financial lives. Focusing more broadly means less time for independent research, as well as increased reliance on tools and resources that asset managers provide in order to fill the gap. Practice management resources saw the biggest jump, with a 20 percentage point increase in use from 2018. Maintaining a client base and effectively gaining prospects is vital as lower-cost investment options proliferate. These resources help advisors save time creating presentations or flyers and help them focus on client relationships. We also asked advisors to identify the most important site features to them. Advisors still gave fund profile pages the highest importance rating in 2021, even though usage has fallen. Regardless of other services and resources, asset managers should ensure their fund profile pages are detailed and engaging. Following fund profile pages, the 2021 advisors gave the subsequent 3 importance ratings to different tool types. Portfolio construction and analysis tools, the top used feature, received the second highest importance rating at 79% top 2 box. Fund screener and comparison tools and calculators and or planning tools fell close behind, both at 77% top 2 box importance. Advisor technology is more available than ever and now must compete with the robust tools at brokerages and digital advice firms. Advisors place a high premium on all tool types, therefore firms have high expectations to meet. Practice management resources trailed tools slightly to earn the 5th spot. The resource also gained the most percentage points between 2018 and 2021 with an 8 percentage point increase. As with usage, these gains in practice management reflect the changing business model for financial advisors. Sales and client-facing materials were tied to practice management resources in importance. These materials, similarly to practice management resources, help advisors focus more on client relationships and less on document production. 7th in importance is the wholesaler and customer contact information. Contacting a wholesaler from an asset management website was the 4th most popular activity, and advisors clearly value the option to doing it. Our special section addresses the wholesaler-advisor relationship in more detail, examining effects from the pandemic and analyzing what advisors value in a wholesaler. We also took a closer look at specifically what about fund profile pages advisors valued. So with fund profile pages identified as the most important and 4th most used features on asset management websites, firms should ensure they are meeting advisor expectations about these vital resources. Providing the most detail possible across all fund profile categories is helpful, but advisors place the highest premium on performance and risk details. Offering in-depth benchmarked performance and comprehensive risk statistics makes a fund profile page really stand out amongst the crowd. Fund overviews and interactive and dynamic charts tied for the 2nd most important features on fund profile pages. Both these features help advisors to quickly scan and digest complicated data. Overviews with the most important information and clear data visualizations really save advisors time and keep them engaged. Our top firms for fund profile pages offer significant data points across all categories, and top performers stand out by integrating quick links to relevant resources, such as John Hancock, who does so with fund-specific thought leadership it connects on the fund profile page. We also took a closer look at which tools and what tool features advisors value. So tool usage and importance have increased significantly since 2018. However, within tools, there is a hierarchy of functionality that advisors prefer. Advisors rated fund comparison tools as the most important tool offering. This baseline tool really helps advisors evaluate performance, identify gaps, and find rebalancing options. The next most important functionality is portfolio allocation recommendations. This advanced feature is only available from select firms, including our top 2 portfolio construction and analysis tools from BlackRock and JP Morgan. Firms tend to position these recommendations as observations and list their proprietary funds as options to help. Advisors also highly value integrated literature and tools. While comparing funds or examining a portfolio, advisors want to be able to read analysis on a particular fund's importance or see a detailed fee breakdown. This integration is something that JP Morgan excels at in particular. This next slide takes a look at these sorts of features and functionality in practice management and business building resources that advisors value. Practice management resources are the 2nd most used and 4th most important feature on advisor websites according to our 2021 survey. However, not all practice management resources are equal in the advisor's eyes. The most important practice management resource feature is timeliness. Advisors want regularly updated and relevant content. While some materials are likely evergreen, advisors affected by the particularly volatile past 2 years want more relevant materials to use. Incorporating COVID-19 and the war in Ukraine into volatility resources can help ensure relevancy in practice management content. Advisors also want more beyond baseline practice management resources. If a firm offers a PowerPoint presentation, for example, one that an advisor might share with their clients, advisors place a high importance on support documents such as a script or a complimentary worksheet that save them additional time and stress. As important as supporting materials are both resource formats and the ability to receive updates on content. Format variety ensures advisors can consume content in whichever way best suits their needs, and update notifications save advisors time checking sites when there are no new publications. These features make advisors' lives easier, and they can consume content whenever and however they want. Now I'm going to dive into our special section where we're going to go over some of the questions we asked about the advisor and wholesaler relationship. Overall, we saw that COVID-19 did not decelerate advisors meeting with wholesalers. The vast majority of advisors we surveyed, at 88%, have met with a wholesaler during the pandemic. In fact, most of those advisors, 54%, reported meeting with wholesalers more often since the onset of the pandemic, with just 16% of respondents stating that they communicated less. During the pandemic, video conferences like Zoom or WebEx were the most common, with 83% of advisors reporting meeting with wholesalers in this way. Similarly, phones offered an alternative to in-person meeting, with 59% of surveyed advisors claiming they had a call with a wholesaler. Still, many advisors, 56%, met in person anyway, emphasizing the value of face-to-face interaction. Advisors want to meet with wholesalers, so firms should make communication channels open and let advisors choose what is most comfortable for them. Our survey also saw how important advisors consider wholesaler relationships. So advisors place a high value on in-person meetings with wholesalers. As seen on the previous slide, more than half of advisors that met with a wholesaler did so in person during the pandemic despite risks. Many advisors, 72%, responded that meeting in person with wholesalers in the future would be either very or extremely important. Survey respondents emphasized the importance of meeting with a wholesaler before doing business with a firm. 71% of advisors said connecting with a wholesaler was very or extremely important to do before deciding to work with a firm. Advisors use these wholesaler meetings for a variety of reasons, but the top objective identified by survey respondents was learning more about an asset manager's services. Advisors want a comprehensive relationship with a firm that goes beyond funds and into resources like tools and practice management materials. And that's all I have for you today. Please feel free to reach out and contact us if you would like a copy of our full report or if you have any questions about the data discussed here. Thank you and have a wonderful rest of your day.